All right. What's going on, everybody? I'm very excited to bring you today's video. We got to talk about TLT. It just continues and continues to crash. What does this mean, and what can you do about it? And how can you spot potential reversing signs or signs of future collapse moving forward? Okay, so we'll talk about how TLT most likely is going to see a 12% drawdown based on the measured move from its last 12% drawdown, where that's going to put the TLT. We'll talk about the relationship between bonds and the Japanese yen. As you can see, these very closely mirror each other. We had the big yen carry trade that blew up on everybody, and it was potentially going to spark a change, but we continue to see the yen still roll over. And then we're going to talk about commodities. Okay, so when you look at commodities relative to bonds, they're forming a base, a very classic bull flag pattern there. When you look at commodities themselves, they've reclaimed the all-time high anchored VWAP, forming a bullish, falling wedge pattern here, or you could try and call that a flag pattern as well. And what type of commodities, right? Well, maybe things like gold, okay? Gold, perhaps we're in the middle of a secular bull market in gold. Okay, we had a decade-long bull market, decade consolidation, and after the breakout to new all-time highs here recently in gold, potentially we're going to have a decade-long bull market in gold. But it's not just gold, there's other areas too. We'll talk about how when you look at energy via crude oil futures, heating oil futures, and gasoline futures, all came down and tagged a 10-year demand zone and are bouncing off of there. We're seeing energy prices started to rise as of recently. I shouldn't be a surprise. And when you take a look at inflation expectations and the relationship that that has with gasoline, we see gasoline breaking out here. And that shouldn't surprise you that we're seeing inflation expectations breaking out here as well. And again, when you look at commodities and you take a look at inflation protected treasuries, this is basically inflation expectations as well. We see inflation expectations breaking out here. Could that be a precursor for perhaps commodities breaking out? And a part of commodities is going to be agriculture. Okay, again, we saw a decade-long bear market. Are we perhaps due for a decade-long bull market in agriculture? This is a very clean base right here, and it looks like above this all-time high anchored VWAP, we can continue heading higher in agriculture. And agriculture has a very close relationship, an important relationship with the bond market, and it's really evident when you take a look at DBA versus TLT, right? You can see here this is a maximum time frame monthly chart. So going back as far as these charts can, you can see they have a very clear inverse relationship. And when you zoom in on a daily time frame, that relationship becomes even clearer. So I'm going to break all these things down in depth for you guys today in today's video. So be sure to smash that like button, subscribe to the channel, help me get to 10K subs, guys. That'll help out the channel a lot. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And I do want to mention I got a completely free newsletter for you guys called Investment Intelligence, giving out free finance and trading related content. I try to sprinkle in as many free trade ideas in there as I can. So you guys can go back and review the website, actually. Check it out. Check out some of the previous trade ideas, how some of them worked out, and just the different things in there before signing up, and see if it's something that you want sent directly to your email inbox. Use that link in the description. You can also join the Investment Intelligence private trading group, get access to our Discord. Using promo code Powell will get you guys a very nice discount on your membership. And what's inside of there, you're going to get 20 plus swing trade ideas every week, custom scripts and indicators that I use on a daily basis. And then there's exclusive intel and exclusive chart layouts that I use on a daily basis as well. All right, now let's go ahead and get started here and let's talk about TLT. Okay, TLT, we had a 12% drawdown, okay, from basically the September highs to the November, December-ish lows over here. Then we got a little bit of a dead cat bounce, and the measured move, okay, which was about a 12% move, is going to take TLT back down to its bear market bottom demand zone. Okay, so it may not take us all the way to the bottom. We may undershoot the bottom, but I think that it's really interesting that the measured move is going to take us down here to the low 80s on TLT. Now, whether or not we react positively to demand, whether or not we actually get down there, is going to be a whole nother story. Okay, but the story right now is still the same. TLT is crashing, treasury rates are pumping. Okay, so I want to provide you guys with some valuable content rather than just doing what everyone else is doing and talking about, oh, well, here's a price level, here's a price level, here's what we're looking for on an RSI. let's actually dive into some of the mechanics and intermarket and intramarket analysis. Um, so the first thing we want to start off with here is US 30-year bond futures. Okay, and this is just going to give an outlook for bonds. Okay, this is just going to represent bonds. And then if you take a look at the Japanese yen, these two almost have identical charts, right? And so, supposedly the Japanese yen carry trade, was imploding. Right, but people are starting to return back to that trade. We're starting to see the yen drop back down and make lower prices. We haven't created lower lows, but we do see that it is falling here and is starting to decline back down. And so is the bond market. All right, the bond market is doing the same thing. So this relationship is still intact. And this is a good signal to, and a good thing to monitor, right? And maybe if you start to see developments in the Japanese yen, you start to see that breaking out, well, then maybe you can look at that as a precursor for perhaps bonds breaking out. Now, relative to bonds, commodities are setting up very well. This is DBC divided by AGG. AG is the aggregate bond fund. Okay, so just kind of representing all bonds, and DBC is the commodity ETF. And we're at a level here where we've formed the bases multiple times, and we've seen commodities rally higher. Right? I mean, we did it here initially when this chart began. We did it over here. We undershot it a little bit, formed a nice base breakout. And here we are again, potentially forming another base on the verge of a breakout, right? A much cleaner, simpler chart is if I told you that this is what Meta looked like, or this is what Tesla looked like, or name your favorite, stock, Nvidia, you guys would be bullish on this and saying, hey, well, this thing looks like it can break out. Let me see if this breaks out and I can go long and trade, and catch a breakout trade here. So again, this is commodities divided by bonds. So this is a relative performance chart. So as this chart is going up, it means that commodities are outperforming bonds. And you can see that commodities have been outperforming bonds very dramatically over the past few years until this most recent consolidatory period. Now, when you look at the fund itself, the index DBC, you see a very similar pattern, right? You see a very strong performance to the upside. And we're coming here testing demand, all right? Prior resistance turns to, prior supply has now turned into new demand. We've reclaimed the all-time high anchored VWAP. To break down why anchored VWAPs are very important, they are volume weighted average price anchored to a specific time. So if you anchor it to the all-time high, you can see what the average buyer and seller looks like, from the all-time high. Okay, specifically. So if we're trading above it, it means that the average buyer is now in control. If we're trading below it, it means the average seller is now in control. So it's a very important focal point, being above that all-time high anchored VWAP. It means that if someone was dollar cost averaging all the way at the top, they're now in profit. Okay, and so that is when people start to look bullish and the bulls are starting to regain control of the price. We also have a falling wedge here, which is another bullish chart pattern. If commodities break out, think about what is inflation, right? Inflation is the prices of things going higher. If the commodities index is going higher, it means that the prices of things is going higher. Okay, it's just very simple concepts to understand and think about and realize that you can analyze a lot of different things through the stock market that maybe perhaps you didn't think of. Now, right here, I love this chart. Okay. So commodities, what are some types of commodities? Metals are commodities, right? And gold, we know, is a precious metal. A lot of people have used gold to as a store of value or a symbol of wealth or money, however you want to phrase it, for ages, right? This goes back ages and ages. And gold has a very interesting chart. Okay, when you just zoom out on things, you see that gold is very secular, right? It had a secular bull market. It was around a decade long, and then we corrected through time. Okay, yes, there was a small price correction here, but when you look at the overall theme of the chart, this is really just healthy consolidation. We had a decade-long consolidation, basically. Are we now, since that we recently made new all-time highs and breaking out, are we now perhaps in a decade-long bull market cycle? Right? That's something that's very possible and something to think about, right? Is hey, bonds look terrible right now. We'll take a look at some more bond-related charts. But what can I do about it, right? Where are some other areas of the market that are perhaps captivating or interesting to me that I'm not paying attention to? And when you zoom out on things and maybe not looking at so much of a day trade on gold or a short-term swing trade on gold, but you look at this perspective, it looks like gold is in the beginning stages of another secular bull market. Now, here's a great chart right here. Speaking on commodities, we have crude oil futures, heating oil futures, and gasoline futures. So just think of energy, right? This is basically just energy. And what do we see? This is a 10-year chart on all of these. Prior resistance, overhead supply, becoming new demand. Prior resistance, overhead supply, becoming new demand. Prior resistance, overhead supply, becoming new demand. We're at very logical levels where we're seeing energy bounce across many different types of energy, such as crude oil, heat oil, and gasoline futures. Now, whether or not these are just, small bounces as we've seen in the past and we roll back over, or whether or not these turn into sustained breakouts, these are things that you want to think about and monitor and come back to the theme of, okay, inflation expectations, right? If inflation's going higher, what does that mean? That means the price of things is going higher, the price of things is increasing. Okay, energy itself going higher is very inflationary for the fact that the cost of transportation, okay, not only storage and things like that, but transportation. So if you were selling something for $10,000 and you were paying $1,000 to transport it, and the price of whatever the transportation goes up to 2,500, goes up to 3,000 because of fuel prices for the methods of transportation, whether it's airlines, ships, whether it's trucks and different things like that. That often can spill over into the actual prices of goods and services. Okay, not just goods, but also services, which is an area that's been really sticky and tough to battle when it comes to the inflationary market that we're battling right now. A lot of it has been real sticky around services and service related types of inflation. And again, we see gasoline breaking out here, right? You look at the UGA, the US Gasoline Fund, breaking out. Is it a surprise that inflation expectations are breaking out here as well? No, right? Because they're following these things. They're looking at energy bouncing. They're seeing gasoline breaking out. They are understanding these concepts that I'm explaining to you guys, and you're seeing that reflected in the market. Okay, so that's one of the reasons why prices are going lower. Yes, you can read the headlines and be a headline reader and say, oh, well, Trump's tariffs, the market's pricing in Trump's tariffs. Well, regardless of that, okay, if Trump's tariffs were there or not, you can just look at price action alone and see these things, right? If you're seeing the price of things going higher, then it's very reasonable to expect for inflation expectations to go higher, and potentially even inflation to rise. Okay. And these are all really good ways to monitor it. I've dropped videos on a lot of these chart layouts, and these chart layouts are available to members of the Discord, and different things like that. These are things that you guys can run through, save these chart layouts and breeze through them and really get a good concept of the market, understanding of what's going on behind the scenes. Now, focusing on commodities and inflation expectations. Here we have the inflation expectations breaking out. Look at commodities, right? We saw those charts, but now we're seeing both of them together, right? We already looked at the DBC and the wedge that I had, right? This is a very simple one: prior resistance, prior supply, becoming new support, new demand, forming a double bottom here, very close to a trend line breakout. If this is going to be a leading indicator, then we could see commodities break out. Now, one thing to monitor for a bullish signal, okay, for maybe the market or for bonds, is if this was a oops, right? If this was a false breakouts tend to lead to fast moves. And so if we start to see inflation expectations roll over right here, okay, and give this up, it's very likely that we could potentially see commodities break through demand, right? Or maybe it goes the other way. Maybe commodities break through demand and then this turns into a false breakout and we start to see less inflation getting priced into the market, and that could be bullish for stocks, that could be bullish for bonds. Okay, just in terms of pricing and rate cuts and rate cut expectations. Now, let's talk about some more types of commodities. Agriculture, right? We've talked about energy, we've talked about heating oil, crude oil, gasoline. We talked about commodities in general via the commodity index. Agriculture is another one, and agriculture is a really important one to monitor as well, We'll break that relationship down a little bit deeper. But look what we had here, guys, a decade-long bear market. Okay, just simply using a trend line to identify these, secular trends. And here we are, perhaps in the beginning of a decade-long bull market that started in 2020, roughly around 2020. Could we see commodity or agriculture continue to rise for the next 10 years, right? That's something to think about. That's not a guarantee. We're not saying that commodities are going to just continue going up in a straight line, throughout a 10-year period, but it's definitely something you guys have to consider. And when you consider these things, you're like, okay, well, maybe do I want a little bit of exposure to these types of things in my long-term portfolio? Or maybe I want to perhaps put some types of hedges on. There's lots of different ways you can use this information, but this is information that I don't see a lot of people sharing. This is information that I think is really valuable and you guys should appreciate. So I would appreciate it if you guys would hit that like button. Now, again, looking at DBA, all right, we have a nice base formation here, trading above the all-time high anchored VWAP. DBA looks like it could get to 29 or 30.75. Those are the next overhead resistance levels. Is that going to happen soon? No, this is a pretty slow moving, relatively speaking, right? When you're, compare to stocks that move 10% in a day, 5% in a day, that's something that we wouldn't really expect out of an agriculture fund, but it's something to monitor and see how this progresses. And the reason it's so important to monitor the agriculture funds is because when you look at things on a monthly time frame, right? So these charts go back, almost 2 decades, almost 20 years, and we can see that they have a very clear inverse relationship with bonds. As agriculture is going down, bonds are going up, right? So we talked about those decade-long, bear markets in agriculture. We talked about, some decade-long bull markets in different areas. We're seeing those types of relationships on a secular basis. Bonds have been in a very strong downtrend for years now. Okay, they peaked in like around 2020. All right, and they've continued to go lower ever since. The possibility of us being perhaps in a secular bear market in bonds is something real that we could consider. Now, on a shorter time frame basis, this chart is still relevant, and you can use it for potential swing trading opportunities or just market monitoring. Right? We see as bonds as agriculture is going down, we see bonds going up, and then we see that inverse relationship still intact. Agriculture starts to rally, bonds start to decline, so on and so forth. And you can see where we've been in this period where agriculture continues to put in higher lows and higher highs. TLT bonds are making lows, lower lows, lower lows. So that's going to wrap up today's video. Hopefully you guys learned something new. Don't forget to sign up for that newsletter, Investment Intelligence, completely free. You can get that sent directly to your email inbox, by signing up. You can join the Investment Intelligence private trading group using promo code Powell. That will get you guys a nice little discount on your membership. Inside, you'll get 20 plus swing trade ideas every week, custom scripts and indicators, exclusive chart layouts, exclusive intel, much more. That's if you sign up for the full access. Okay. Thanks for watching, and I'll see you guys in the next video.